Now to the housing market. Battered housing stocks helped drive down the Dow almost 1.5% last week, and Wall Street is eagerly anticipating new housing start numbers on Tuesday. But many Americans have already found that the most important number in their household, their mortgage payment, is rising. NBC's Kevin Corke has our report.
For Garen Njijian and his wife Amy, it's still hard to believe.
I looked at that to where, it seemed like a no-brainer.
The couple had excellent credit, had recently purchased their first home in Riverside, California, and with a new baby on the way, they were looking to save a little money.
That was real enticing. It was a carrot dangling in front of my face.
The carrot? A refinanced mortgage that would cut their monthly house payment by more than a third, 37%. But in the avalanche of papers the couple signed, they never realized how much their loan could really cost. They took out what's called an ARM, an adjustable rate mortgage, and they usually keep your payments lower at first, but over time your monthly mortgage payments can increase dramatically. What's more, the total amount you owe on your home can go up too. How? The provisions buried in the fine print allow lenders to increase the rate they charge depending on market factors such as the prime rate. So, a monthly mortgage payment of $1,500 could jump to $2,000 overnight, and a total mortgage balance of $300,000 could rise to $340,000 in under 2 years. That's what happened to the Njijians. Instead of saving money and chipping away at their mortgage principal every month, now they're watching their principal go up and their equity go away.
You've really found a place that we knew we can retire in and start a family, and then knowing that there's a chance that we might lose it, it's hard.
Some housing analysts say many borrowers simply don't understand the loans they're getting.
The situation is bad right now, but it very likely will get worse in the near future.
Why? Because despite the risks, ARMs are still very popular with consumers. But as those loans mature, those borrowers could face huge increases in their monthly payments. Even the fixed-rate borrowers could be affected by ARM borrowers, who are more likely to fall into foreclosure.
Each foreclosure will lead to about a 1% decline in the value of properties nearby.
Back in Riverside, the Njijians hope their experience will serve as a warning to others.
It's kind of like going to the doctor. Don't just take the advice of one. Maybe go get a couple opinions to make sure you're making the right move.
Kevin Corke, NBC News, Washington.
Some amazing pictures this weekend from the French Alps, where 160 teams are competing in the Pierre Menta.